What is a lie? To lie is to intentionally mislead others when they expect honesty. Lies are familiar, commonplace. We all tell lies, to each other, to ourselves, to those we govern, and to those that govern us. But what makes a lie American?
Weapons of mass destruction.
Live kid, we stole
Proceeding training of ISIL forces.
the American experiment.
Attacked by the military industrial.
I will never lie to you. It eliminates asset purchases by the Federal Reserve.
One of the matters for the coronavirus. Pay for itself.
Please stop it.
Americans have been lied to repeatedly, with cause and without. People fault the elite class of 1%ers who allegedly avoid paying taxes, oppress the lower classes, and exploit the public. Some blame talking mannequins with mouths sounding in service of corporatism and not for their countrymen. A minority blame the economic system of capitalism entirely and tout an older, more ideal collection of lies as revolutionary replacement. Others swallow fatalism, embrace consumerism, autistically trade options, or pay no mind because who cares? We got a house, a family, and bills to pay. Lying has been around since humans have been able to speak. American lies are young and distinctly injurious. The lies told to Americans are pervasive, pathological, and there's only so much abuse of honesty the citizenry can tolerate. Our economic circumstances collectively balance on a pin. Bubbles pop, money is printed, narratives are drafted from numbers and graphs, and criminality is immune to charge so long as you occupy the right seats, know the right people, and understand that there is no long con, and that it's always been this way. The lies, blatant, insulting, patronizing, and we still continue to accept them, unwittingly, without alternatives or recourse, but because we're told it's in our interest. Fortunately, the lies are in our interest. They're a part of an adopted mythology to the world's pantheon, a mythical system called the global financial markets. Like ancient myths, the system is grounded in reality as it represents the intersections of our economic activity. The representation is the invention of capital and the tangible notation of it, money. With money, heroes, emperors, and plebeians alike write their stories into legend. Money is earned. It's earned by trading time and tasks. It's earned by using a skill, trade, or talent at the request or behest of those willing to pay. It's earned by extracting, harvesting, yielding, and facilitating trade or transfer of resources. It's earned through manufacturing or selling objects of utility or desire. It's earned through the creation and maintenance of firms, private entities, corporations that conduct business with one or all of these, and then some. Earning fuels endeavors along the line of time, and civilization progresses when these endeavors yield inventions, innovations, and the discovered potential of tomorrow. Money is integral. We believe it to be perpetually integral. We can surmise that money will always be earned, and that we can borrow against the value of future money to use as collateral for today's expenditures. We can expend money at the cost of not having it. We can expend credit at the cost of future earnings. Debt. From there, the mythology devolves into temporary and necessary falsehoods. This falseness has driven progress beyond the reaches of mere money. Humans owe a lot more than what they've paid into this enterprise. And because we're fallible humans, falsehoods are engorged, ravaged, and zombified to no end. Because lies are worth telling, the enterprise of progress depends on them. We contrive exterior markets where transactions are spiritual and transfers of future obligations generate profit. We orchestrate capital ventures of alternative types of earning where labor, commodities, sales of products, and services rendered do not apply or only imply. We combine, weave, and fold accounts of debts and credits into products to be sold to bidders who stand to earn by holding them. Our lies are clever, fuel markets aplenty, and award uneven riches to those who partake. The myth of capitalism has served us stupendously thus far. We wouldn't believe in it otherwise. The lie of the US dollar is persuasive enough to be believed by all. It can be tendered, accrued, and stored. It's stable enough to be trusted, and the value is evident as the paper trades hands and the goods and services are received. The dollar itself is valueless without the convinced, and legless without the government's ability to control its supply. Whether the belief in the dollar is true, compulsory, or adopted by the complacent masses is moot. Cash is king. Dollar is supreme. Fiat. The value of the dollar was once coupled with the value of gold. Most of the world relied on gold to calculate exchange rates. This hasn't been the case for nearly 50 years, and the subsequent periods of economic volatility, inflation, and meltdown were composed by the currency given value by government decree. Exchange rates without the gold standard are calculated by a floating exchange rate, which is based on supply and demand relative to other currencies. Government ultimately determines this rate, fiat. Fiat currency's existence is dependent upon our use of it in this lofty thing called the free market. currency is supposed to serve the people it's generated and owned by. In order for it to serve us, we must participate in its travels. It's a means to satisfy our needs, fulfill our wishes, produce, create, celebrate, and all the other great things us apes like to do. And atop that, there's a special promise of wealth and limitless possibility if you use it better than others. That's incentive, and it drives individuals to ambition in the angelic free market. Individuals found businesses to compete for customers and clients to generate profits to reinvest back into the business, right? Right. Profit margin is instrumental to the growth of business. Competition between businesses ensures reasonable prices, incentivizes innovation and reinvestment, and is the foundation of a free society with free market values governed by free people. A free market rewards success. The failed reap nothing and shutter their doors. Even if you paid attention in school, you should know that Econ 101 failed in teaching you that this is another lie. Competition isn't static. Businesses grow faster than the enterprise of progress, consolidate their competition, and monopolize naturally. Lawmakers overseeing the enterprise of progress pretend to prohibit this by writing laws easily exploited, maneuvered around, or outright disregarded. Businesses become big and dominate the market. To government, their power must be clipped slowly, their profits must be scalped legally, and if they do fail, government interferes with the free markets and transfers the people's tribute to subsidize the failures of big business. Big business adapts as they should and expect the interference, which allows certain big businesses to fail without consequence and turn their immunity into opportunity funded by the people the businesses did not directly service. Betrayal echoes, and the incentivization is ripped from the median citizen's aspiration to market success and wealth thereafter, and given to the corporation for the maintenance of their dominance. What does this have to do with the fiat US dollar? Everything. Fiat dollars are accumulated by businesses at the expense of the people. The people accumulate fiat dollars at the expense of profits of businesses. The government collects both expenses and has the added benefit of controlling the parameters. Fiat becomes wealth when its concentration is facilitated by this process and the millions of subroutines compromising it. The majority of the currency supply flows in the direction of business and the individuals that run them, and to the upper percentile economic performance of people. The lion's share goes to the government in the form of compelled tribute to celebrate and validate its existence. This should be a balanced affair, considering government controls the dials of the money flow. Instead, however, there are economic wounds of disparity. Even worse, the wounds have widened in ways detrimental to the average American, a widening that echoes the world before tumult and collapse. Since the establishment of fiat US dollars, Americans are trading labor and time by working harder than they have in the past and earn a substandard dollar for their contributions to the economy. The dollar of 1973 has not progressed to the dollar of 2020. The dollar of 1973 should be worth less than the dollar of 2020. Anything else is a contradiction in the enterprise of progress. If money is to serve the people, and fiat is meant to be believed, what is to be said of its failures? Do we accept these failures? Money does serve the people to an extent, but for how long? How long do we continue to accept and tell the lie once we can no longer believe? You like money. We all like having money, and we all money here, so fiat isn't going anywhere. And what is our bodacious fiat Benjis without big banks? The perennial bank, a storage facility for your money, a place where you can convince the kinds of people you see in stock photos to lend you cash, profiting on interest accrued when you pay it back before your spouse sees that you've been buying Funko Pops and next day option contracts by the thousands. Not every bank operates the same way. Retail banks serve small-time capitalists by safeguarding their savings, lubing up their checkings, granting you specific loans or CCs even though you're not creditworthy, and offer other financial services like investment accounts, sending overdraft notifications to your phone, and financing mistakes like automobile purchases. Commercial banks offer the same shit as retail, but service corporations. Might as well start an LLC. You may receive a business credit line if you mention you have several streams of revenue thanks to OnlyFans, Robinhood, and Swagbucks. Investment banks service larger clients with more complex financial needs, like facilitating underwriting, issuing securities, managing mergers, and brokering or advising for the institutional clients. Investment banks are for big fish who make big capital and need to offload some of the responsibility and effort onto vitamin D deficient money men. Their clientele ranges from corporations and large funds like pension, hedge, and foreign slush funds. Then there are central banks. Banking as an ideal service should be exactly as described: a storage facility for your money, a lender if you desire to spend outside your means, and an investment avenue if you want to walk down Growth Street. But banks absolutely suck as a service. They can't even store your money. When you deposit money into your account, banks use your money to lend to others so that it can create liquidity in an illiquid market and pocket profits from interest. Deposit $10,000 into your local Chase and they'll lend to an aspiring idiot who wants to buy a brand new $25,000 truck during a fucking pandemic. If your money went to Bradley in his Dodge Ram, what if you decide to pull out your money in protest? protest. Well, the money you receive in the $15,000 difference of the loan is another Chase client's capital. This fake money expands the radius of economic mobility so that banks can lend outside their means while plebs like you spend outside your means as well. Everyone spends, credit is created, and growth is recorded, simulating a futuristic market economy with none of the futurism in all of the TED Talk fiction. Banks have essentially created a phantom lending enterprise. Because this is a free market, banks also service government. A lot of business is done underwriting government bonds, which is entirely ethical and a mutually beneficial engagement. Considering the banks profit off the redemption of bonds they underwrite, they would hypothetically have a vested interest in engineering deficits and co-opting the unwilling taxpayer to foot the bill. Banks are terrible service providers to their clients. Aside from bothering their pay pigs with shitty marketing emails, account statements, and credit card deals, they pilfer their subjects by the way of corruption, fraud, and malicious schemes that you'd expect from Tony Soprano, not someone like Brian Moynihan. To put a quick dollar figure to add perspective, as of 2019, banks have collectively paid $243 billion in fines since 2008, a little less than 40 times the $6.3 billion of annual revenue from U.S. hair salons. Keep those industrious hairdressers and the immense value they add to society in mind. Earlier this year, Wells Fargo was fined $3 billion for committing rampant fraud on a national scale, opening accounts without consent, document fraud by robo-signing, identity theft, secretly transferring money between accounts, and issuing bogus fees to account holders. The total Wells Fargo payout to the impacted customers was $142 million. The SEC handled $500 million to harmed investors. That's only $642 million. Where did the rest go? Here's the official DOJ statement.
The criminal investigation into false bank records and identity theft is being resolved with a deferred prosecution agreement in which Wells Fargo will not be prosecuted during the 3-year term of the agreement if it abides by certain conditions, including continuing to cooperate with further government investigations. The $3 billion payment resolves all 3 matters and includes a $500 million civil penalty to be distributed by the SEC to investors.
That's your answer. Can you feel the metallic sense of justice? In 2019, Wells Fargo's net profit was $19.5 billion. Bank of America sullies the words of its brand name. It's hardly a bank, it's only of its corruptible nature and nothing else. And it's about as American as heart disease, so it's definitely American. Bank of America was fined $9.3 billion to settle the case involving the sale of rotten mortgage-backed securities, which totaled $3.2 billion in repurchases. Bank of America was fined $727 million for deceptive marketing of credit card add-ons. They also mistakenly overstated their capital by $4 billion, fined another $1.3 billion for trash securities sold by Countrywide, and then finally fined $16.65 billion to resolve the DOJ case relating to Bank of America and its subsidiaries for their role in the 2008 financial crisis. All of this was just in 2014. Of the nearly $17 billion settlement, $7 billion of the payment by Bank of America was in the form of mortgage relief. And as a result, they were awarded with a legal waiver by the DOJ, a get-out-of-jail-free card to most, a pocket billions of dollars of ill-gotten gains without consequence card for Bank of America. Bank of America's gross profit since 2009 is approximately $137 billion. JP Morgan and Chase are well-versed in fraud and deception. In 2012, a scheme of mass-produced document fraud and perjury ordered millions of homeowners to foreclosure court preemptively. Document fraud by the biggest U.S. bank is apparently only worth a few $100 million in recompense. JP Morgan skirted the obligation to pay by using mortgages already sold as credit toward the settlement. In the same year, JP Morgan reported a $2 billion trading loss, and shareholders provoked the FBI to open an investigation. They lied. It was actually $6 billion of a trading loss. JP Morgan was fined $4.5 billion to settle a case alleging the sale of shit mortgage-backed securities in 2005 and 2008. Nearly every year, the bank settles lawsuits with the SEC, the FDIC, the OCC, the DOJ, and the Fed. Arguably, the most notable scandal in JP Morgan and Chase history was Bernie Madoff's $65 billion Ponzi scheme, as the money involved flowed through their accounts and they covered up their knowledge of it. JP Morgan's gross profits since 2008 is roughly $257 billion. JP Morgan Chase, Bank of America, and Wells Fargo's individual gross profits since 2008 either exceeds or nearly meets that figure. These are just 3 of the top 15 banks in America, and every single one of them got a rap sheet longer than Gucci's. In the bailouts of 2008, Wells Fargo and JP Morgan received $50 billion combined. Bank of America received $45 billion. Taxpayer-funded government-guaranteed loans with better APRs than a grad student's 780 credit score could receive. Loans that have since been repaid according to these people, paid back partially through profits reaped from criminal activities conducted between 2002 and 2016. And these crimes are known to the public because they were caught. Out of the gross infractions and calculated fraud campaigns, the banks remain immensely profitable and open for business, maintain 8% of the GDP, and are around a third of corporate profits. One wonders what value they generate for Americans, other than the basic ideal of how banks serve their customers. And with their ill-gotten cash flows, the IOUs of America's future sold by our government at a faulty premium with no ROI to the taxpayer. What better way to eradicate criminality than to nationalize the consequences? In 2015, the 12 largest banks now control 70% of all bank assets. In 2020, the top 4 banks hold 50% of all banking assets. Big banks are not a product of the free market.
Now let me show you a chart.
It's been said the masquerade began with Reagan and his Friday show and tell presentation. Reaganomics. The old tax breaks to the rich will benefit us all, because Adam Smith was truly a prophet. Every human that has the personality traits and the mendaciousness to become a part of the wealthy elite are surely formulating their financial decisions with the average pleb in mind. Trickle-down fiat inflation and the cheery death knell to the middle class exasperated the already sick and malformed economic ideas people held in the past. Amplify the trends of income inequality and decreased purchasing power. Reduce the economic pool of the middle and lower classes to that of consumers and laborers, not to fund the lifestyles of the elite, because that's too simple, but to continually progress in an unviable economic state and to grow damn near every asset bubble there is, artificially, in the name of short-term gains, by the people, for the wealthy. It's clear the government has always had a fiduciary obligation, not to the common American, the people it claims to serve, but to the corporate thresher and the isolated elite who are privileged with the legal means in which to thieve with impunity, if they choose to do so. The compulsion to keep profits maximal and innovation low, to outsource and offshore the corporate meat making, to cut down the maintenance costs of oligarchic bones. It's the relegation of responsibility and consequence from the wealthy to the common, by the people, for the wealthy. It's important to be distrustful of both banks and government, as they long since proven that profits and personal interests are above the people they claim to serve. When a major financial institution takes on risk, it subjects itself to potential failure. In a free market, businesses fail, there is no pity, only new businesses, growth, and innovation. Big banks resemble a cartel, a group of independent businesses which come together for the purpose of reducing competition amongst themselves, price fixing, dividing geographic locations, and the occasional municipal bond scalping. Banks are no stranger to collecting checks from taxpayers, especially when they diddle asset classes and cause financial crises. Entirely reliant on the government to continue this continued effort, the banking sector are recipients to welfare programs not available to the down-and-out American, not the SNAP, SSI, or the TANF benefits. No, the banks receive the FED benefits, like the TARP of 2008 and the TALF of 2020. According to the U.S. government, the $700 billion TARP fund was a success. It protected the economy from a total meltdown. It generated a whole $15 billion of profit from the loans paid back. Inflation calculations would imply the TARP actually netted a loss of $24 billion, but it kept firms alive. Think where we'd be without GM. Once the TARP was deposited into banks like Citigroup, Goldman Sachs, and the like, billions of dollars were paid out in bonuses to executives and employees to congratulate them on doing their jobs terribly. But you already know this. We've all seen The Big Short. What you might not know is that the TARP deal was not just $700 billion. They didn't power down the money printer. It ran into a secret slush fund. Excuse me. An emergency lending program, of which the bar for credit issuance was low, and banks, firms, and other leeches put literally anything up for collateral, like equity. The TARP funding saved the profitable recession from a groveling depression, according to the former Fed chair and Times darling sweetheart savior of the economy, Ben Bernanke. He claimed that revealing borrower details would create a stigma. Investors and counterparties would shun firms that used the central bank as a lender of last resort, a stigma of taking newly printed fiat. The secret emergency lending fund was $7.7 trillion. $7.7 trillion. The lending was disclosed after Congress enforced an audit years later. This was not the corporate welfare project we all know and love. No, this was a psychotic, nefariously reckless cowing to Wall Street and its flock. Money was printed to the point of absurdity, and to think of what the money printers are up to now. If fiat currency is still to be believed after all these institutional abuses at the cost of the taxpayer, the future value of the dollar, and America's place as a global superpower in the world, then what about debt?